The first day of spring was a few weeks ago, which signals a shift towards warmer weather and improving pasture conditions for cattle producers. So how does this change in the season also impact cattle markets? Joining us now to talk about this is Terrell Piatt with CattleFax. Terrell, there are typically some seasonal trends that occur in the springtime, and do we anticipate those same seasonal trends playing out this year?
We do. I really start with beef demand first when we think about this spring period. As weather warms, you get into grilling season that tends to be very supportive to the beef complex. Also, when you look at the fed cattle supply, looking forward towards especially May and June, both of those factors look to come together to be supportive of a higher trending market as we get deeper into the spring. Relative to the calf market as well, we've been off to a record start here again this year. Prices on a U.S. average basis near $350 a hundredweight. Those do tend to continue to move higher into March and April, with grass demand getting to support those prices to get those cattle ready to turn out for the spring and summer. Lastly, I look at the cull cow market as well. It's also been very, very strong to start the year, with mainly a function of tighter supplies and strong demand for 90s lean trimmings. They're well on pace to establish a new record here in the next several months as well.
Cow-calf producers took home pretty big paychecks this past year. What's the outlook for cow-calf producers as we move into 2025?
It looks to be another very favorable year. Prices are obviously off to a strong start, and we do expect that to carry into a very solid summer video auction. And just where we are from a cyclical standpoint relative to cattle supplies, that should limit the magnitude of the fall break that typically occurs in the calf market as you get into the fall run.
You know, there's some feedlots that are not quite as full as they've been in the past. What's your blink on the overall outlook for feedlots?
Probably the biggest risk from that perspective is going to be getting that inventory in those yards, especially as you go through 2025 and into 2026. But relative to just performance in the fed cattle market, it's truly been off to a very impressive start. When you look at January especially, already notching a new record high near $209 per hundredweight. And when we look at the demand levels that we're seeing and that supply dynamic as you go further into the springtime, it looks very likely that we'll be able to match or even exceed those levels as we go forward as well.
Planters will start rolling soon across much of the country. Tell us what your predictions are in terms of crop production.
We do expect to see an increase in corn acres, especially considering the spread between new crop corn and soybean futures. That does indicate that we should see more acres planted relative to corn. However, with the drier weather conditions forecast for the summer timeframe, yield may be below trend line, but is still likely to be a new all-time record. That should leave stocks to use for corn at a very comfortable position and limit sustained gains in terms of prices. We will lose a little bit of soybean acres if we're going to increase corn acres. At the same time, though, the demand for soybeans hasn't been as robust as it has been for corn, so we may not see the same type of price appreciation relative to beans.
And certainly one big factor is hay production. And I don't know about everybody else, but there's still a pretty good stock of hay up where I'm from. We'll see how that plays out if it doesn't give us any moisture. But what's your sense and outlook for hay production and hay supplies into 25?
We're certainly in a lot better position than when we think back to, say, 2022, when stocks were at the tightest level since the 1950s. Okay. We've increased that stock over the last couple of years. And although maybe the weather conditions aren't going to be the most ideal for us, at the same time, we've built stocks back to a more comfortable spot. And we've continued to see a liquidation in the beef cow inventory, where we're at the tightest level since 1961. So that reduces a little bit of the demand, even though we aren't expecting as strong of a production this year relative to hay prices. The other thing that I look at on hay is it does tend to have a very solid correlation to corn as well, where we don't expect to see a huge amount of price increases that are sustained for corn. That probably reflects the trend for hay as being a flatter trend for 2025 as well.
Gotcha. And as we know, everything's always dependent on weather. So, Terrell, thank you so much for coming and sharing those insights with us.
Perfect. Thanks for having me.
You bet. Now, if you're looking for top-notch beef industry research, information, and analysis, then check out the experts at CattleFax. You could visit their website at cattlefax.com for the tools you need to make profitable decisions.